Hello, welcome back to Sabi Market Channel. It's nice to have you here again. All right, today we are hopping into Julius Berger's Nigeria PLC, and what we'll be evaluating today is their operating expenses for the space of 4 years, and that's from 2020 to 2023. Okay, Julius Berger is a very famous organization. At least for a couple of years now, they have been the leading construction company in Nigeria. I believe they are heading the construction industry. They seem to be at fourth place around the world, also fourth place. For Nigeria, they are still number one. Yes, and they built most of the major roads that we see in Nigeria, the bridges. They were the one who constructed it, and their job is really good. So let's see how let's take a peep at their back end. What's happening with their operating expenses? What's been happening? What's going on? How does it look like? And that's what we will be evaluating. And this is a look at what their operating expenses has been like for the past 4 years. So here we'll be looking at four majors, which is their marketing expenses, the depreciation, the staff cost, and the administrative expenses. So firstly, let's see what an operating expenses actually is. So operating expenses are actually the costs incurred by a business or an organization to operate and maintain its daily activities. So, and this expenses actually excludes the capital expenditure. So operating expenses consist of salaries, wages and benefits, rent, utilities, maintenance, marketing, advertising, promotions, insurance, legal and professional fees. It also includes office supplies, travels, training expenses for workers, for staffs and their leaders, for executives. It also incorporates depreciation and amortization, utilities, subscription services and softwares, research and development, learning and development expenses, cost of goods sold, direct cost of producing products and services. So the operating expenses is actually essential for the smooth operations of a business, and they can help maintain employee productivity. When these things are well put in place, it actually improves employee productivity. It can enhance customer acquisition and retention in the marketplace. Also, it also guarantees and fosters asset maintenance and upkeep. It aids compliance with regulations, company regulations, legal regulations, and all that. And it also innovates growth. So OPEX, in short, which is operating expenses, is actually a very crucial component of the company's financial performance, and managing its efficiency is vital for profitability and sustainability. So some other examples of these operating expenses includes bank charge, credit card, other stuff like that. So, and in most cases, it can be categorized into different types. So we can have fixed expenses. So the fixed expenses can include rent, salaries, and insurance. So variable expenses. So we can have utilities, traveling, marketing, and semi-variables. So, and so many others like that. So something to take note of is that effective management of operating expenses is crucial. It cannot be emphasized to optimize the profitability of cash flow within an organization. So, and the cash flow can revealed a lot about a company's financial health, which is what we are, which is the core and purpose of this video. What does it reveal about a company? What does it help you see? How does it help you evaluate the efficiency, the financial efficiency, and the financial health and competency of a company? So a low operating expenses compared to the revenue of the company actually indicates efficient operation. So if they are operating at a very low rate in comparison with the revenue that the company is making, if they are operating and the cost of their operations is low compared to what they made in their revenue, it means that there will be a lot more that is left to keep as their net profit. But if the operating expenses value is too high, it means that they are operating at a very high rate compared to their revenue, and there won't be much profit to keep. So a high OPEX, which is a high operating expense, can eat into their profits, and it indicates potential issues. So this can also review their scalability. So a rapidly growing OPEX can suggest scalability challenges. So it can actually stand as a challenge to a company scaling. Then the cost structure. So operating expenses composition. So like I mentioned before, the fixed versus the variable reviews the cost structure and flexibility. And also the high OPEX can impact cash flow, potentially leading to liquidity issues. They might not be able to pay off their debts and all of that. And also it also reviews management efficiency and effectiveness. So a controlled OPEX suggests effective management. If the company is able to control their operating expenses, it actually testifies that this company, this management is operationally efficient. And also it can help to compare benchmark and help to compare between company, the competitiveness between companies. So by analyzing the operating expenses here, like we're doing, investors and analysts, business people and management can assess a company's financial health and identify areas for improvement. So that is a clear explanation of what operating expenses is. Now let's see, in this regard, let's see what is happening here at Julius Berger Nigeria PLC. So we could see here that in 2020, already in the chart, in this start bar chart, we could see that there is I wouldn't say it's a trend, but we can still call it a trend. But we could see that there's an increase in the size of their operating expenses. Now, this doesn't really mean that they're actually doing bad. It could also be attributed to the the inflations that are taking place. So that it's low here in 2020 doesn't mean that they are actually spending too much money in 2023. It's just it could be an influence of the naira value, the currency value that has changed over time. So for here in 2020, we could see here, first of all, if we take a look at the legends, we could see that the yellow part of the bar is indicating the marketing expenses, and the gray part is indicating depreciation, the orange part staff cost, and the blue parts, which is the administrative expenses. So this marketing expenses is almost invisible here, but we can see it at the top of it's the top of the bar. It's at the top of the bar here. So we could see that it's going almost unnoticeable, meaning that they spend so little when it comes to marketing. So they spend so little cash into the market. They invested so little in marketing. So also, if we observe very well, we see that the staff cost is where they spend most of their cash. The staff cost had so they spent about 56 billion when it comes to the staff cost for let's say I'm talking about 2022 now. Let's see what they spent in 2020. 2020 they spent about 43 billion in when it comes to staff cost, to pay their staff. They spent 43 billion naira. So, and we could see that increased in the next year, in the immediate year after that. We see that it increased by 2 billion, and then it increased to 56 billion, and lastly in 2023 they had 58 billion. So we can see that the most of their expenses was on staff costs. Most of the expenses was on staff costs, and that was followed by administrative expenses. So these administrative expenses actually include so the office rent, utilities, maintenance, insurance, travel and training, professional fees, office supplies, telecommunication and internet costs, software, subscription services, regulatory and compliance costs, licenses and all that, their permits and all those stuff like that. So for example, before they can operate, they have to pay for license and and other permits, and this stuff they have to renew every year, and also other miscellaneous courses. So the administrative expenses are actually essential for day-to-day operations of a business, but they do not directly contribute to the production or sale of product or service. So these expenses are typically categorized as indirect costs or overheads. So effective management of administrative expenses is crucial for maintaining profitability and efficiency in a particular business. So that's about the administrative expenses. This is staff cost and marketing, because we consider the expense only. So now lastly, when it comes to the depreciation, so this depreciation is actually talking about the it's actually the systematic allocation of cost of a tangible asset over its useful life. So it represents the decrease in value of an asset over time due to wear and tear, obsolescence, or other factors that could affect that particular asset. So depreciation is a non-cash expense that helps business match the cost of an asset with revenue generated by that asset over its useful lifespan. So it's a way to spread the cost of an asset over its useful lifespan rather than charging the entire cost to only one period. So for example, if a company buys a machine for, let's say, 10 million naira that has a 5-year useful lifespan, so they will not just remove that 10 million from that year that the machine was bought. So they would break it down into, let's say, 5 years. So each year the company would depreciate the machine by, let's say, 2 million. So 2 million across 5 years, it means that they've gotten that 10 years back. So the machine value on the balance sheet would decrease by 2 million per year. So that's just how it works. So depreciation is used for assets like property, plant and equipment, vehicles, furniture, fixtures, machinery, equipment and buildings. So that's it. And this depreciation also have many types in different cases. So that is a picture of how and what the Julius Berger Nigeria PLC operating expenses looks like in the past 4 years. I trust that this video was insightful and you really gained a lot, and this would inform whatever decisions you make, and has given you clarity about not just about Julius Berger, but also about what an operating expenses is. And this applies to not just Julius Berger, but also other organizations that you intend to know how they operate and function. So you can also transfer this to your analysis and your research on other companies. So thank you so much. If you love this video, please kindly click the like button and drop your comments if there's any further clarity that you need, or there are any contributions that you'd like to make. Also, please kindly subscribe to the channel and click the notification button so that whenever I drop another insightful video like this, you will get a notification. All right then, until we see you again. Thank you.